SK hynix raises a record $26.5 billion in historic US IPO, South Korean. That single number resets the AI playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. That is the largest IPO any South Korean company has ever raised in the United States. SK hynix just pulled it off, and they're not raising this money to expand their legacy memory business. They're betting the entire sum on a single bet, that AI companies will pay whatever it takes for high-bandwidth memory chips. Here's what this means. NVIDIA's H100 and the next generation of accelerators need memory that moves data at speeds traditional DRAM can't handle. HBM, high-bandwidth memory, stacks multiple memory layers vertically, shrinking the distance data has to travel and multiplying throughput. NVIDIA's winning because they designed the compute. But the chips don't work without memory that can keep pace. SK hynix, Samsung, and Micron are in an arms race to supply that memory, and whoever scales it fastest wins the AI infrastructure market for the next 5 years. Why raise $26.5 billion right now? Demand is outpacing supply by a factor of 3. Every major AI lab, OpenAI's backers, Google, Meta, Microsoft, Anthropic, they're all constrained by memory availability. If you can manufacture HBM faster than your competitors, you can charge premium prices and lock in long-term contracts. SK hynix is betting that the capital they raise today will let them triple production capacity within 18 months, before Samsung or Micron can respond. But here's the second implication that nobody's talking about yet. This IPO signals something deeper. The memory chip business is now worth more than the logic chip business in the eyes of investors. NVIDIA designs the brain of the AI accelerator, but SK hynix is selling the nervous system. And right now, the nervous system is the constraint. That's why SK hynix can command a $26.5 billion valuation and why investors are treating this raise as a sure thing. For Indian semiconductor startups and engineers, this is instructive. The highest margin, most defensible chip segment isn't the one with the most famous design, it's the one solving the hardest manufacturing problem. HBM is brutally difficult to produce. Yields are low. Tooling costs are enormous. But if you can crack it, you own a piece of every AI infrastructure stack globally. For global investors watching this, SK hynix's move is a signal that the AI build-out is real and capital-constrained. If a company this large needs $26.5 billion to keep up with demand, it means demand is accelerating faster than even the optimists predicted. That's good news for GPU makers, bad news for companies betting on slower adoption. The contrarian angle? This level of capital raise might actually be the top of the cycle. When a single company needs $26.5 billion just to avoid losing market share, it means margins are about to compress. SK hynix and its competitors will race to build capacity, oversupply will follow, and by 2026, memory pricing will have normalized downward. That's when the real winners emerge, the ones with the best manufacturing economics and the lowest cost per bit. So what changes next? Watch quarterly earnings from SK hynix, Samsung, and Micron over the next 6 months. If they report that HBM order books are shortening or pricing is moderating, the market will have signaled that the acute phase of the AI infrastructure boom is ending. If orders accelerate and backlogs grow, it means we're still in the explosive growth phase, and every other memory manufacturer will race to raise capital of their own. One more thing to monitor: geopolitical risk. SK hynix is South Korean. Samsung is South Korean. The US government is already signaling that it wants memory manufacturing on American soil. If this IPO succeeds and SK hynix becomes more integrated with US investors, expect regulatory pressure to shift some of that production capacity to US-based fabs. That's not a bug from the US perspective, that's the feature. This IPO is not just a money event. It's a market signal that AI infrastructure is moving from hype to capex-intensive reality, and whoever controls the memory bottleneck controls the next phase of AI advancement. Pay attention to this. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.